Welcome to Business Middle East. In this episode, we focus on the recent movements in the oil and stock markets. Due to conflicting global economic figures and a lack of clarity in the Federal Reserve's intentions on interest rates, the oil market continues to flop. Last week, oil prices recorded the worst weekly drop since last March. The high-performing MENA markets were hit as well, opening the week with losses affected by the bloody terrorist attack in Paris. The question now is, what are the safe havens that investors could head to amid a state of instability in the stock and oil markets? We'll discuss this, but first, let's take a look at the story.
A wave of falls dragged oil prices down to record a loss of 8% last week. On Friday, WTI fell to the levels of $40.74 a barrel, and Brent crude dropped to just below $45 a barrel. Many factors contributed to the oil price decline, notably the worsening US inventories numbers, which rose over 7 weeks in a row, something not seen since the beginning of this year. The monthly International Energy Agency report, which pointed out the possibility of oil stocks remaining high because of estimates from mild winter in Europe and America, which could impose more price pressure. Finally, there are more signs of instability and further slowing, including in China, where GDP growth dipped below 7%. Also, EU growth rates in the third quarter fell short of expectations at 0.3%. It had been expected to grow by 0.4% at least. These factors have caused a fall in global stocks. Wall Street ended last week with its biggest loss since last August, amid concern about when the Federal Reserve Bank intended to raise interest rates. And European stocks fell as well because of a lack of clarity regarding economic performance. In the Middle East, the Egyptian Stock Exchange recorded its lowest close since December 2013 and closed on Sunday nursing a decline of 4.18%. Dubai, Saudi Arabia and Abu Dhabi were also down. Declines in these markets at the beginning of the week were caused by the terrorist attack in Paris, and they were also caught up in the wave of declines due to oil market confusion.
To shed more light on oil and stock market developments, joining us every week is Nour Eldeen al-Hammoury, Chief Market Strategist at ADS Securities in Abu Dhabi. Nour, what are the trends of oil prices after the drop last week, and what are the levels to watch?
Despite the sharp decline last week, oil prices have remained within the same range since August, between $40 and $45 for West Texas crude. The good thing is that WTI crude held at $40 and closed the week above that level. Moreover, during the first trading day of the week, crude rallied by more than 0.7%. WTI advanced above $41 and Brent crude is trading near $45. In the meantime, the $40 level in WTI crude is a psychological barrier. A break through that support would increase the fears for further declines ahead. However, we need to point out a very important point here. The current scenario seems to be the same as what happened to commodities in the global markets between the period of June to September, when the markets were pricing in a rate hike by the Fed, leading to a sharp decline in commodities and equities while the US dollar rallied. In the meantime, the US economic figures remain weak. However, the Federal Reserve remarks will remain the main driver of the markets from now until the Fed meeting in December.
Okay, Nour. The Fed continues to postpone the rate hike. Can the global economy afford for the Fed to raise interest rates?
Earlier this week, Japan slid back into a recession, and this is the fourth consecutive recession in the past 5 years. The US growth rate has stuck below the Fed's annual target at 2.5% since 2009. Right now, the annual growth rate averages around 1.5%. This is despite the fact that the interest rate is at a more than 7-year low. The question is, if the US economy is unable to achieve its annual target with a lower interest rate, then how will it achieve it when rates rise? At least there's no sign of inflation, in addition to further signs of slowing down, whether in Europe, Asia or the USA.
في ظل عدم وجود مؤشرات للتضخم وفي ظل وجود مؤشرات إلى مزيد من التباطؤ فضلا عن استمرار تباطؤ الاقتصاد العالمي سواء كان في آسيا أو الولايات المتحدة الأمريكية أو في دول الاتحاد الأوروبي.
In the Middle East and before the Paris attack, we noticed a decline in the stock market in addition to the low oil price. What are the safe havens that investors could head to in the current period?
So far, everyone's favouring the US dollar and the Japanese yen. This is what we noticed since the beginning of the year. The decline in Middle Eastern equities comes from weak corporate earnings, declining oil prices, and, for sure, the Paris attack that negatively affected the markets.
الهجمات التي حصلت في فرنسا والتي كان لديها نوعا ما أثر سلبي على جميع الأسواق العالمية لأنه
Ours was the first market to trade after the Paris attacks, and we saw increased fears among investors for further intervention in the region, which has also affected all global markets.
في الوقت الحالي شهدنا تحركات واضحة نحو الدولار ونحو الين ونحو
We also noticed a notable move towards the dollar and the yen, and we believe this might last for some time.
شكرا لك نور لانضمامك إلينا.
شكرا جزيلا.
That's all for now. You can join us on Euronews social media, Facebook or Twitter using #BusinessMiddleEast. Thanks for watching. See you next week.
الأسبوع المقبل.